All right. Hello, everyone. Thank you for joining us today. I'm Jennifer Hahn. I'm co-chair of the National Flood Association's Data and Mapping Committee. I'm pleased to welcome you today to the session for demystifying FEMA's flood maps. For those of you less familiar with the National Flood Association, we're a national nonprofit trade organization dedicated to advancing the interests of the flood risk management community. Our members include a diverse group of stakeholders across insurance, lending, and flood mapping and data fields. As part of our mission to promote education, collaboration, and open dialogue, today's session will highlight key developments in flood insurance with a focus on the impacts to lenders, consumers, and financial services stakeholders. Before we begin, please feel free to enter any questions for our panelists in the chat during the session. We will address them once the presentation concludes. If you're a CFM, you can earn 1 continuing education credit from the ASFPM, and we'll share a link at the end so you can request a certificate of attendance. And finally, today's recording will be available on demand sometime within the next week. So let's get now that the housekeeping's in order, let's get some talk going on flood. We have a poll question to kick it off. And we want to know how many of you live in a flood zone. So while everyone is working on that poll question, do you live in a flood zone? Let's go ahead and talk about what we're here for today. We're here to clear up some of the biggest head scratchers in the world of flood zones, misconceptions, if you will. We'll tackle questions like, do floods really only stick to low-lying areas? Spoiler alert, no. Is an elevation certificate a magic get out of insurance card? No. And why FEMA maps still rule the day even when fancy new models enter the chat. Our experts will unpack these common myths, share some real-world stories, and hopefully leave us all feeling a little more confident navigating the wonderfully thrilling world of flood zone determinations. I'll try to keep things flowing smoothly, no flood warnings expected. Grab your metaphorical rain boots and let's splash around a bit. First, I want to introduce our panelists. We have Corey Eskelin from Zactus. We have Andy Yasadis from Western Technologies Group. And we have Derek Pearson from AFR Services. I want to kick it off and give everyone a chance to introduce themselves. So let's give a shout out to Corey Eskelin.
Hello, everyone. Thanks for joining us. My name is Corey. I work for Zactus. I am the Senior Customer Support Manager for their flood services. With Jennifer, I am co-chair of the Data and Mapping Committee for the NFA, and I have been in the flood space for 25 years now.
All right. How about Derek?
Hello, everyone. I'm Derek Pearson. I've been the research director at AFR Services for just over 7 years. I manage the flood research and customer support divisions at AFR, and I oversee all aspects of the flood zone determination process, including disputes, rechecks, and letters of map change.
All right. Andy, how about you?
Hey everybody, my name is Andrew Yasadis. I'm the COO at Western Technologies Group. Like my other panelists here, we are a national flood determination vendor. I've been working in the flood industry for about 17 years, and I've helped build and maintain the determination arm of WTG into what it is today. And I'm happy to be speaking with everyone today.
Thank you. Thank you. Jennifer, like I said, I'm a co-chair for the Data and Mapping Committee with Corey Eskelin. I'm also the manager of dispute resolution and quality control for ServiceLink. So we're very excited to have you guys here with us today, and hopefully we can jump in and entertain you all for about an hour. So let's get started. So Corey, many property owners believe that floods only happen in low-lying areas or near water. Oh, you know what? The poll question just got done. So let me actually stop that for a minute and let's talk about the poll. So we have 100% answered. 26% of you said that you did live in a flood zone, and 74% of you said you did not. This was a bit of a trick question because everyone lives in a flood zone. The answer is yes, you do live in a flood zone. You just may not live in a high risk zone. You may live in a low risk zone. So that's something to keep in mind as we're chatting today. So let's start this back up again. Many property owners believe floods only happen in low-lying areas or near water. Given that approximately 40% of NFIP claims from 2015 to 2023 occurred outside high-risk areas, can you walk us through how homeowners, their risk perceptions should be influenced by this by providing us the definition of the flood zone, some history of the different map styles, and just some different perceptions for that homeowner?
Absolutely. So like the poll illustrated, everybody lives in a flood zone, different level of risk, but not everybody considers their zone a zone. A lot of you obviously don't think you live in a flood zone, which probably indicates you don't feel that you are at particular risk of flooding. So when we're talking about the National Flood Insurance Program and the flood insurance rate maps, it's important to remember the origin or why they were created. The insurance definition of flood is on the screen right now. A general and temporary condition of partial or complete inundation of 2 or more acres. Could also include the collapse or subsidence of land along shore of a lake or similar body of water, or a water feature such as a river banks, shorelines along the coast. But the purpose of the maps is to serve as a vehicle or a means to identify the high risk flood zones primarily. They were designed to identify a specific risk level, the 1% annual chance flood. Eventually, they evolved to also include depictions of the 0.2% annual chance flood, which is considered moderate risk, but is still outside of that special flood hazard area, the high risk zones that the maps identify, where flood insurance would become a requirement for a lender. They were used initially as a rating tool for the flood insurance policies as well, but beginning about 5 years ago, FEMA divorced the rating of the policy from the zone information, and took it to a more actuarially sound practice for rating, and moved away from the flood hazard. So at this point, the maps are basically just a tool for the lenders. Where does flooding occur? Flooding happens everywhere. Everybody's in a flood zone. A big misconception is that only high risk zones flood. Statistics show that unfortunately is not the case. 2015 to 2019 numbers show that at least 40% of NFIP claims during that period came from outside of those high risk zones. So while the maps are a good tool for identifying risk, they are not the end all be all, and they can be wrong. Again, they only speak to a specific level of risk, by design. When the legislation was enacted, the lenders needed a standard by which to require or not require flood insurance. So the maps were created. They identified that 1% annual chance risk. As we move further into the 21st century, mapping has come a long way, and now we can begin talking about adding to those maps, providing better standards or more information to identify different levels of risk. We put together some slides here of some of the actual maps so you can kind of see the evolution. These are from Florida, Fort Lauderdale, Broward County, but you can see the earliest maps were just a shading indicating the flood hazard location. As time went on, they became a little more evolved, showing better base layers, road layers. They have changed a little bit. You can see the different contours. And then most recently, they've introduced aerial photography as a base layer so that you can see an actual world depiction, structure locations, streets, buildings, other features. So now we do actually have the National Flood Hazard Layer, an online mapping tool that shows all of this information and provides a digital depiction. You can search your property or any address. You can zoom in to a location. You can remove or add layers as you need, depending on what information you're looking for. While the maps are, again, designed as a tool for the lenders to identify that high risk zone where the flood insurance is required, they do require, or they do provide a great deal of information about the flood hazards that they're identifying. They provide base flood cross sections. They provide other features within the areas, structure identification such as levees, dams, channels, lots of fun stuff. So it's just getting more exciting as we go along.
Thank you very much, Corey. We want to move on to our next topic. We're going to talk about LOMCs and actual flooding events. Specifically, we're going to talk about just a good example of that is Camp Mystic here in South Texas. This event kind of highlights the confusion around LOMCs and risk after a property is removed from the high risk zone via the letter of map amendment or letter of map revision process. Andy, Corey, whoever wants to hop in, what do you think, or why doesn't a LOMA guarantee that a property is going to be safe from flooding, even if it's removing it from the mandatory insurance requirement?
Sure, I could jump in. So I think it's first important to understand what the flood insurance rate map acronym stands for. And it's flood insurance rate map, not flood insurance risk map. So that's a common misconception, right? Corey talked about it a little bit. But the truth is that the firms were never really designed to communicate risk, but really just to set the mandatory purchase requirement, right? So therefore, removal from the mandatory purchase requirement via a LOMA just means that flood insurance isn't required, not that risk is removed. Mother Nature does not care about the line on the map. In kind of preparing for this presentation, I was looking at the 2023 report by the Technical Mapping Advisory Council, which is a federal council that advises FEMA. And it kind of identifies that today's SFHAs are mapped on a 50% rule, meaning that the SFHAs have a 50% chance of underestimating the area that would be inundated by the 1% annual chance flood. Therefore, said another way, 50% of the time, the 1% annual chance flood will exceed that line on the flood insurance rate mapping, exceed the special flood hazard area delineation on the firm. So that's, I can't think of a better example of why removal via loam C doesn't mean that risk is removed, right?
Definitely.
And again, the maps were designed kind of as a baseline. Like you said, Andy, they weren't designed to specifically identify all risk. Part of the National Flood Insurance Program, part of the requirements to participate in that program are the adoption of those maps as a baseline. They are essentially the bare minimum. The communities have to adopt those as a risk document, but they are encouraged to go above and beyond, to do their own mapping, find out within their communities where the real high risks are. Like you said, 50% rule is that's a lot of leeway. So
yeah, and I think this graphic on screen does a good job of kind of depicting it too, right? We got two letters of map change. The top one is for Building 8 in Camp Mystic, and it was an out as shown Loma. So, and you can see it corresponds to the little flag on the left side of the screen there. You can clearly see that structure is not in the map special flood hazard area. The bottom Lone C is structure 10, highlighted in purple. That is a removal, right? So that structure was in the map special flood hazard area on the firm, and the LOMA removed the mandatory purchase requirement. Both structures saw water in the Camp Mystic flooding, so that this is just a perfect depiction of, Mother Nature not caring about the line on the map.
Very, very, very much. What do you think, or how do you think major events expose the difference between the regulatory boundaries and the real world behavior?
Yeah, I mean, obviously, so the quote that Corey gave before kind of comes to mind. Um, and it's on floodsmart.gov. It's pretty well understood or kind of disseminated out there. But 40% of flood claims come from outside of the special flood hazard area. That's not one specific event. That's just an aggregate. 40% of flood claims through the NFIP come from outside of the SFHA. So that's as real world as it gets, right? 40% of the time that a claim is issued, it's from a structure that was not in the map special flood hazard area. And I kind of think it also, lends itself to the importance of thinking about risk, because obviously these people did, right? They obtained flood insurance even though they weren't in the map special flood hazard area, and it ended up, I'm sure helping them out a lot when, after the flooding events happened and they had to rebuild.
Yeah, the one thing that's interesting to me about Camp Mystic and the mapping for the rating, not necessarily the risk, you can see here on the right-hand side of the slide, you see that this part of Camp Mystic is an A zone. So this is an area where FEMA didn't even in any detail map risk. So, you go into those areas. These are the areas of true concern when you're building, and why elevation and establishing that actual data for the building is necessary.
right, they did not have a detailed study to draw this map. So they have, to the best of their ability and the information available, they have identified the high risk zone here in that depiction. But again, it's approximate. There's no elevation data available for the level that area depicted as high risk would reach.
We even, I believe, if I remember correctly, we looked at what the Camp Mystic event was classified as, whether it was a true 100 or 500 year. And I believe, if I remember correctly, it wasn't even a 500 year. It was bigger than a 100 year, but it wasn't quite a 500 based on the data we had.
And again, another issue with identifying risk, there's so many different various levels of risk to be identified. So it becomes a true challenge, especially when you're trying to depict that on a static document like a flood map. The maps are not updated real time as new data becomes available. The process for revising a flood insurance rate map is very protracted because it is a regulatory document. There has to be review periods. There have to be public announcements, adoption by the communities, and then the maps once they're put out there for the public. You have to wait 6 months to give the communities time to adopt them before they become effective. So while the data is out there ahead of the map becoming effective, again, it doesn't change quickly.
Yeah. We had, I know we said we were going to answer questions at the end, but there's a couple of comments and questions that kind of play in here. So I wanted to, Steve said there is indeed flood elevation data for many A areas, but it is not regulatory in nature. And that is a perfect example and kind of helps us actually segue into our talking about flood zone determination, specifically the lender side of the flood zone determination and how the regulatory document that shows us that A zone with no detail is something that lenders are using for the mandatory purchase requirement, while the communities are using their established BFEs or detailed studies that they've done individually, and that causes confusion. So let's step right into the next section here, the misconceptions about flood zone determinations. And to start, let's talk about what is a flood zone determination. A flood zone determination is a compliance document. A flood zone determination is not a due diligence document. We are specifically doing, the flood zone determinations based on the mandatory purchase guidelines as a result of the National Flood Insurance Reform Act of '94. Due diligence, you can see there's a note listed on all of the flood zone determinations talking about it's solely for the use and the benefit of the entity based on the Reform Act and shouldn't be relied upon for anything additional. So when we're talking about the common misconceptions, Derek, what do you believe are the most common misconceptions that you encounter regarding what lenders can use to make flood zone determinations and why these misconceptions persist despite all the regulatory guidance?
Sure. So we definitely see a lot of misconceptions and frequently asked questions in our business, but I kind of highlighted the top three. So number one, a lot of customers assume that, we're all looking at the same flood map, so there's no reason we should ever have a discrepancy. Why does one company say it's in, one say it's out? Well, there could be, several reasons. One, it's possible that the different flood vendors are using different research methodologies, such as levels of automation, or there could be a new letter of map change that was recently issued that wasn't picked up on one of the determinations. Sometimes it's just a really close call and open to interpretation depending on which aerial photograph is used. So in those cases, sometimes if they provide a survey that shows the actual footprint of the building and it could be right on the line, that could make a difference. But basically, the bottom line is if you have two different flood certs from two different companies and they don't match, you should just request one or both of them to recheck it. And usually we're more than happy to do a manual recheck and try to resolve any discrepancies between two conflicting determinations. And in most cases, we can find a resolution if enough additional information is provided and we perform a second review. Because even though we may be competitors, all NFA member companies cooperate with each other, and we can typically come to a consensus on the correct answer once additional information is reviewed and considered. So that's number one. And then number two, so I think this is probably the most common misconception and frequently asked question that we see on a daily basis, is that confusion over what an elevation certificate can be used for. Almost every day, people send us the elevation cert and say, okay, here it says the lag or the lowest adjacent grade of the structure is higher than the base flood, so you can just go ahead and revise that flood cert. But no, unfortunately, the regulations are very clear that we can't do that. But federal law does not allow for an elevation certificate alone to be used to remove a structure from the SFHA, and that's stated as such on the instructions for the elevation certificate. A flood zone determination must be based solely on the currently effective firm or any official FEMA revisions to that firm. However, an elevation certificate is an important first step in the process, and it can be used to support a letter of map change request to FEMA. But only a letter of map change approved by FEMA can remove a structure from the SFHA. So the elevation certificate is certainly a useful document, and it can be used for other purposes, such as rating the flood policy, from the insurance agent. But it's just the first step in the LOMA or letter of map change process. And then, so number three is similar. It kind of goes along with number two. A lot of lenders, property owners, if they want to dispute that their structure or property is in the flood zone, they'll just start, sending us all kinds of documents, engineering reports, flood studies, local floodplain permits, and they expect us to interpret those and then make, our, out of preponderance of the evidence, we should just clear that flood determination. But as is the case with an elevation certificate, federal law supported by regulatory guidance is very clear that a flood zone determination is to be completed using only the flood information shown on the current applicable flood insurance rate map. If a surveyor, engineer, or local floodplain manager has provided their opinion or elevation data that shows the property to be above the 100-year flood, that data could be used to support a recheck or possibly other remedies, such as a letter of map change, but it cannot be used to overturn a flood zone determination. Customers often send us those things, but all the information in the world outside of the FEMA map or a letter of map change is not going to be able to overturn the determination. Again, only a letter of map change can be used to remove a structure or property from the SFHA.
Yes,
Yeah.
and there was a comment. Oh,
Sorry,
go ahead.
sorry, Jennifer. Let me jump in. Yeah, we see this a lot with developments, especially in the Northeast, where like you'll have a developer and they do everything that they should have done, right? They followed all floodplain management requirements. They liaise with the floodplain administrator. They either built on high ground or brought in fill, but until that information is brought to FEMA and FEMA issues a letter of map change, we have to look at the effective flood insurance rate map and call it as we see it. So that kind of goes along with this idea that like everything right can be done, but until it's official, it's not official.
Definitely. I was just going to, we had a comment about the BFE not being a field on the standard flood hazard determination form, and therefore it's irrelevant for the mandatory purchase requirement. So yes, that's the tone we've got going on here. It's the 100% the case. We're looking at a static yes, no, in, out. Does it touch the mapped line? For sure. So again, this is a rating thing, not a rating tool. It's not a risk tool. So let's talk about a little bit more about elevation certificates and the actual letters of map change. We know elevation certificates, we've already talked about it, they're misunderstood when it comes to the world of lending and flood zone determinations for lending. Much of it centers around the way the documents are used by the different entities. So we've talked about why an elevation certificate alone cannot remove the flood insurance requirement. So we want to know in your experience, what part of the elevation certificate causes the most confusion for property owners? And when you're giving guidance to your property owners or to your lender customers, how do you explain the distinction? Are we just talking about the mandatory versus the regulatory versus the community, those types of things?
Sure. So yeah, again, I would just emphasize and remind them that the elevation certificate is just the first step, and the regulations are very clear about what they can and cannot be used for. But for the purposes of the standard flood hazard form, they can only be used to support a LOMA request. And then on the slide that you have up now, yeah, I was just going to point out that highlighted on that the instructions for the letter of map change. The document itself has a disclaimer that explicitly states that the property could be inundated by a flood having a greater magnitude than the 100-year flood. And the letter of map change is not a building permit, and it does not guarantee that the structure or property will never sustain flood damage. So I guess if you want to go to the next slide, we can just kind of outline briefly the different types of letters of map change. So the first one is the out as shown letter of map change, which basically it just confirms that the structure was not in the floodplain to begin with on the map. Somebody may have told them that they were in the flood zone, or they may have had a flood vendor say it was in. So in that case, no elevation information is even required. FEMA will just look at the map and confirm, yeah, your structure is not in the flood zone. So it's, they don't even have to submit an elevation certificate. And then the second one is a non-removal.
Hey, Derek,
yes.
Can I hop in real quick?
Yeah.
You just talked about the out of shown, and we had a question about, the question is, how are LOMA OAS cases handled when they are revalidated? The out of shown status was based on an older firm. Once revalidated, some properties associated are in the SFHA,
Right.
but they are revalidated. So we were talking about that a bit earlier. You want to kind of talk about that?
Sure. Yes, and I'm sure Corey and Andy can jump in and give their perspectives as well. But yeah, we kind of laugh about this because it gets to be kind of a mess when you're dealing with out as shown LOMAs on a revalidation letter, because technically you can't use them if they are actually they were out as shown maybe on the previous map, but now on the new map they're in the flood zone. So, and no elevation certificate information was necessary on the original map when it was out as shown, but now it is in the flood zone. So there's always the question, how do you interpret that? For our point of view, you can't really use an out as shown LOMA that's revalidated if it's now in the flood zone. So you guys agree with that?
Yeah, absolutely.
I do.
Yeah,
Yeah,
overall,
we've seen it more times than I'd like to see it. But yeah, it becomes particularly difficult, I think, when we've seen it with multiple structure LOMAs, right? There'll be 10 structures referenced on the LOMA. 5 of them are out as shown, the other 5 are removals, right? And then they revalidate that LOMA, right? We have to look at those out as showns, and if, like Derek said, if no elevation information was provided because it's not necessary for an out as shown, then we can't consider it valid anymore because it was out as shown, but now it shows as if it's in. However, if elevation information was provided and there is a lag or lowest lot elevation, that's kind of a different story and a different kind of point of analysis there. But they are difficult things to manage from time to time. But yeah, we got to keep in mind that if they're revalidated out as shown, no elevation information on the LOMA itself, it is in fact not revalidated.
Yeah,
right.
I can tell you personally, I've gone through the steps of trying to have some out of shown that were revalidated, reissued based on the current map data. And I have actually seen, maybe even more often than not, when you've got that new mapping data come out with the new BFE data, they raise that BFE, it increases. And so you've got that previously out of shown LOMA that may have included elevation data. But when you reissue it or ask FEMA to reissue it as potentially a removal, it could come back as a non-removal based on that new BFE data.
Right.
And I will offer up that this is one of the few times we've been able to get a straight answer from FEMA. They have stated that they do not revalidate out as shown letters.
Yeah, it would be an error if you see it.
If you are seeing one on a revalidation letter, chances are it's probably an older letter. The program is a living beast. It does evolve. So things change going forward. You're less likely to see those, but I would encourage you to, follow up with FEMA on those. If you can't decide what to do with it, like Jennifer said, go to FEMA, ask them to reissue it, ask them to, put out a new letter on the current map. So, yeah, not an easy answer, but typically,
yeah. All right, Derek, let's finish. Let's resume going through these different.
Yes. So I'll just quickly run through these other three examples since I know we're short on time. So the second one is a non-removal. So this is when someone submits an elevation certificate for a structure, but the lowest adjacent grade, which is FEMA's benchmark for compared to the base flood, the lag has to be at or above the BFE. In this case, the lag is 7 feet. The BFE is 10 feet. So the lag is 3 feet below. So it was obviously denied. And that non-removal LOMA will just say what is not removed from the SFHA and then confirm that the structure is still in zone AE and flood insurance is still required. So if a customer asks us to assist with a LOMA and they provide an elevation certificate that shows the lag below the BFE, then we'll just tell them it's not going to be approved. I mean, we can submit it for you, but I can guarantee that it's not going to be approved because that's very, very clear with FEMA's requirements. So then the third one, removal based on fill. So that gets complicated, but FEMA requires a separate document called the community acknowledgement form that has to be signed by a local floodplain official. And they also require an additional fee to process a request if it is confirmed that the structure was raised during construction using fill material. So basically, you can get it removed if fill was used. It's just more complicated and more expensive. But this was a removal based on fill and shows structures now in zone X shaded. And then the last one, LOMAs that are based on portion of the property or property removals based on lowest lot elevations. That's where usually it's construction is planned in the future on a certain property and they want to get it removed from any kind of federal requirement for insurance before they even build a structure. So they'll have a surveyor go out and draw, survey a meets and bounds legal description of a portion of a property, or in this case, an entire legally recorded property that was removed based on lowest lot elevation. That would have to be higher than the base flood on the map. So there's all kinds, we see all kinds of crazy, complicated LOMAs, but these are just 4 examples of different types of LOMAs that we have to interpret.
Thanks, Derek. So just a quick note, we don't have the ability to unmute attendees. So if you're raising your hand because you have a question, if you'll type that question into the chat, we'll acknowledge it and try to get to it if we can. Someone just also noted, they said, what was the supporting documentation needed for the fill removal? I think it's the exact same as a letter of map amendment. You just have to tag on that community acknowledgement form.
Right. Yeah. The community official just has to sign off that it met all their local requirements and it won't cause like an increase in the flood special flood way.
Mhm.
And it's just an extra document that you have to get
Okay.
signed.
And no rise.
Right, no rise. Yes, thank you.
You're welcome. Oh yeah, and the difference obviously. Thanks, Jim Franklin. Sorry, I don't have my glasses on. Lomas are a free process, and a loamer based on fill does incur that fee with FEMA.
Yes, I
One
believe
of
Um,
them,
it's
you're challenging the natural grade and the actual map. The
mhm.
other is you went out and changed the map,
Yes.
essentially.
Yeah.
right.
So
It looks like I missed a question. If I have a flood barrier system on my property, will my flood insurance be reduced? So you have to look at, are you talking about through your actual agent? Are we talking about your actual premiums? Again, when we're talking about for lending purposes, that's not going to impact the flood zone determination at all. It could be, that type of mitigation is something that your agent could utilize potentially as far as rating the policy, but it's not going to impact the lending side of things and the flood zone determination aspect.
yeah, that's a
Right.
question for your agent.
Mm-hmm.
Anything about insurance or the cost of insurance, you'll want to
Right.
talk to your agent or
Definitely.
reach out to the NFIP. Floodsmart.gov is a good portal.
Yeah, there's a number
Um,
of different
so
Q&As out there too that you could probably Google and find that. So, all right, so let's move on to our last little section here. We're going to be talking about um, future risk modeling. So Andy, let's have you talk about that. We're seeing more discussion regarding future risk modeling. How should lenders, insurers, and communities balance innovative forecasting tools with the reality that FEMA maps remain the regulatory standard?
Yeah, I think, and we'll get into this in the slide deck here, but I think clearly defining the difference between these two data sets, right, um, is the best way, right? One is they're produced for completely different purposes, right? We'll first talk about the firms. So on the slide here, we got FEMA firms and regulatory baseline, right? So the FEMA firms are the official standard for building requirements and for the mandatory purchase, right? They are set like this because they are built on engineering level data derived from direct on ground physical studies and analysis. So some of these studies and analysis are real world cross sectional surveys of channels and structural elements like bridges and roads. Hydrologic analysis, so determining of peak flow rates based on local stream gauges and physical basin characteristics. So real on ground data. And then there is obviously hydraulic modeling involved too. 1D and 2D studies that establish BFE for specific reaches. So yeah, defining the firm as the regulatory baseline, having the client understand that this is what needs to be utilized in order to determine whether the mandatory purchase requirement for flood insurance is upheld, whether a structure needs flood insurance or not. The next slide, I talk a little about the firm methodology. Um, Again, it's a historical foundation, so it relies heavily on historical flood events, tidal and stream gauge records to define that 1% annual chance flood or the SFHA and associated BFEs. It does create the binary risk that has been the subject of conversation for a lot of people recently, right? The in or out boundary. And it does determine it's a legal requirement for the mandatory purchase and floodplain management, but it does lack the risk nuance. And again, because that's not why these maps were created. I think another kind of criticism or kind of issue maybe let's say with the firms or the significant effort that goes into it, right? Because of this engineering level accuracy, it takes a long time to gather this data, analyze the data, and utilize it. So oftentimes there'll be, a map that's released in 2012, a development that was produced in 2011, and you might that new impervious surface and the production of that urban development may not be captured in the firm. And that's opposed to the future flood risk models, right? Future flood risk models are, like I have here, predictive frontier, probabilistic mapping, right? It's to look into the future, right? And it's more for resilience than it is for rating. I mean, they can't be used to rate flood insurance at all. So, unlike the firms, models, and I think probably the most common for everyone, the one that everyone hears is flood factor because it's on the real estate websites, but they're predictive and simulated, not based on local on ground engineering studies. And they're They are utilizing advanced computational hydrology to simulate rainfall events, pluvial flooding and river, flooding over the, kind of a future period, 30 to, 15 to 30 years usually. They do also include sea level rise and changing precipitation patterns. And because of this, they're kind of more property level risk analysis, right? As you can see, it evaluates risk across 140 million structures by substituting local ground surveys with broad computational elevation data sets. So this next slide is kind of like the future flood model methodology, let's say. They're a bit more agile and accessible. So you can see here, average model refresh for a future flood risk model is 1 year, as opposed to FEMA's multi-year, usually 5 to 10 year period for them to refresh a flood insurance rate map. And I think, obviously we talked about the binary aspect of the flood insurance rate map. The future flood models provide a risk gradient, right? A score of 1 to 10 usually, rather than a binary zone. And it kind of helps owners understand flooding potential in the future, and not just whether they require the flood insurance or not. So again, biggest thing for a professional to do is differentiate the two. FEMA firm for flood insurance mandatory purchase, and future flood models for kind of resilience. So here we kind of have some graphics that kind of go through this idea. So again, the FEMA firm, the left-hand panel there, focuses strictly on major riverine and coastal corridors where high-budget physical cross-sections are surveyed on site. Um, what the firms don't do a good job on are the pluvial and tributary mapping. So the future flood models capture that pluvial or rainfall flooding. So captures intense localized rainfall accumulation and urban drainage overload missed entirely by traditional river-only studies. And then tributary risk analysis. So simulates flow through smaller upland streams that FEMA just didn't have the time or resources to actually study.
So it sounds like there's going to be some benefits to the risk modeling. So what benefits do you believe the future risk models bring that the FEMA maps do not?
Yeah, I think the biggest benefit is geographic coverage. So the risk maps just cover larger areas than, more watersheds than the traditional firm does. Again, preparing for this, I was looking at the ASFPM's 2020 report, flood mapping for the nation, and it confirms that a third of the national rivers and streams, a third of the mileage of the national rivers and streams is mapped on a FEMA firm. And about roughly half of the nation's shoreline miles have been mapped, flood hazard wise, on the particular firm itself. So I mean that statistic just shows it right there. I mean, 1/3 of all rivers, mile wise, have not been, 2/3 have not been mapped, and 50% of the coastline has not been mapped. So what you're seeing on screen here is kind of an example of pluvial mapping that the future models do that the firms don't. So the red and purple areas where the flood insurance rate map, this is actually Newark, New Jersey. You can see the Newark Airport in the bottom right-hand corner of that screenshot. If you kind of concentrate on the center of the screenshot there, you can see there's a huge area that is not mapped by FEMA, right? If we look at these future flood models, all of those little kind of non-connected blue areas, those are mapped pluvial flooding that are included in the future risk models that are not in the firms. Same thing here. Again, this is Brick, New Jersey. If you concentrate on the center of the screen, you can see there's a tributary running up the middle that kind of wise off and just stops. When you overlay that future flood risk model on it, you can see that they've mapped that inland tributary all the way, well far inland compared to the flood insurance rate map itself. So again, this is just a visual evidence of the pluvial mapping and the inland tributary mapping that is included in these future flood maps that is not in the firm. So just a little summary of kind of what we just talked about. So we got the FEMA firm, databases, on-ground studies, local gauges, physical surveys. The risk definition for a FEMA firm is binary, in or out. Time horizon is historical records, so historical flooding events, and current reality in there as well. Um, the primary goal, regulation, insurance mandates, and the update frequency being very low. Future models, right, are simulation-based climate-informed projections. The risk definition is not binary, it's a gradient, 1 to 10 usually. Time horizon that they're looking into the future, like I said before, is about 15 to 30 years into the future on what these conditions may look like in the future. Primary goal has nothing to do with rating, mandatory purchase requirement or floodplain management regulations, but public risk awareness and resilience. And the update frequency is a bit higher on the future models in that it's usually around a year.
So, do you foresee FEMA incorporating these tools into future map updates? And if so, what challenges do you think are going to come from that?
Yeah, I mean, FEMA is already in the process of including, the pluvial or rainfall modeling via the Atlas 14 precipitation frequency estimates into their firms. And they're always trying to map more streams than they did before. But again, it's budgetary and time constraints that usually kind of hold them back. So yeah, I mean, I think the answer is kind of yes and no. They're already looking to include pluvial information um, and map more tributaries. I think this really brings us back to the new initiative, the Future Flood Risk Data Initiative, where in the future, FEMA's goal is to start using predictive data like future flood modeling maps in the firms. So this was another thing that came out of TMAC, I believe, where that's the idea for the future, right? And the way it seems it's going to work right now is there'll still be flood insurance rate maps produced. They will still have special flood hazard areas on them. That will still be the basis for mandatory purchase. However, there likely will be um, future flood modeling included in there as a flood prone area or something of the sort. Um, like I said, I think the answer is yes and no. They're definitely including pluvial. They're definitely trying to map more tributaries. They're definitely going to include future predictive models, but it doesn't seem like the future predictive models will be the basis for the requirement, but more management purposes. And I think this slide too, can you go back to that risk rating 2.0 slide? So risk rating 2.0, right now, we're kind of living the hybrid future, right? Because they've evolved their risk rating or their flood insurance rating methodology, as Corey had kind of stated, to be more individual risk-based, right? Insurance rates are no longer dependent purely on the SFA boundary or flood zone and BFE. In fact, flood zone and BFE are not a part of the rating methodology at all. There are individual factors kind of involved there, like distance to water, first floor elevation, replacement cost, um, which is, like I said, we're kind of living the hybrid future. We're kind of in living that future scenario right now where the flood insurance rate map in the special flood hazard area dictates mandatory purchase. However, we have these future flood maps out there that can indicate risk, and if you feel you have risk, you could surely purchase a flood insurance policy. And there is the correction of the cross subsidization between low risk and high risk properties. So the glide path to actuarial rating is kind of still happening. And this last slide is kind of what we talked about, right? Choosing the right tool for compliance. FEMA firms, right? You have to use the FEMA firm to determine mandatory purchase and minimum building standards. Obviously, talk to your local FPA because there could be situations where an ordinance has higher standards, right? You can go above and beyond the minimum requirements of FEMA. So, talk to your FPA, but for compliance, it's the firm. For resilience, you look to these future models to understand kind of where things may be going risk-wise for your property. And again, as I said on the last slide, I think right now, utilizing both tools, right, and synthesizing both tools is the right way to go. Even if it's not required from the, flood insurance rate map, and you can identify from a future flood model that there is risk, you can purchase flood insurance right now to protect yourself. So I think we're kind of at a good spot. Obviously, there's, you know, especially from the lending side of things, there's a lot of boxes that have to be checked once a property is a designated property as being in the SFHA and flood insurance required. But you can go above and beyond that, right? If it's not required, you could still see what your rate's like and purchase a policy to protect your investment.
Very much. Thank you so much for that, Andy. That basically wraps up our content for today. We want to ask you guys really quickly before you pop off, do another quick polling question. Do you have any hot topics that you would like to see in a webinar from the NFA? It doesn't have to be necessarily specifically data or mapping. We have a number of committees that are fun. So if you guys could throw up a poll answer for us. Also, while you guys are answering that question, once that poll goes away, you should be able to see it. We've got a QR code here that you can scan so you can sign up and receive your credit for your CEC credit from the ASFPN. Let's see, did we have any questions that we didn't get to? Yes, we are going to share the PowerPoint, it looks like, and we are going to also have a recording of the webinar. I want to also throw it out there that the National Flood Association's conference we have every year is going to be again in Scottsdale in March. I believe it's the 21st through the 23rd, and the official save the date will be out after probably sometime near the beginning of July after the 4th. We want you guys to look into the National Flood Association, see if it's something you might be interested in joining. But before we hop off, does anybody have any questions they want to pop in the chat before we sign out? Any other panelists have anything they wanted to add that we might have skipped over? All right. I'm not seeing any typing or... Layla just put in the chat for you guys the link to where the recording and the PowerPoint will be for the webinar. And it looks like it'll be up there within the next week or so. All right, well, thank you guys so much for attending. Thanks to the panelists for paneling today. So I guess that's it. And we will see you guys next time.
Thanks, guys.
Thank you.
Thanks, everyone. Thank you.